But right now they're saying just submit the offer. Let me just present it and see what they say, which means that there's not enough people actually doing the aggressive kind of approach of doing the work of, hey, let me offer a little less and kind of work up or do, go back and forth. That has not happened ever. So I think this is
Yeah.
an amazing opportunity for investors that are doing the work.
What if I told you there was a way with DSCR loans to get a interest rate of 5.5% on 30-year fixed rate product and even lower on a 5 to 7 year, perhaps something at 5.25%? Folks, we individuals and consumers, we're going to learn about something called a floor rate. This is something that I do not know what it is. I could guess, but I don't know what it is for sure. So we're going to talk with Jonathan from Convoy Home Loans. We are going to learn about floor rates, and we're going to learn about products today that for a certain set of you could be as low as 5.5% 30-year fixed. Jonathan, what the hell? 5.5 30-year fixed? Let's talk about it. But first, please define floor rate for us.
Yeah. So floor rate is otherwise known as the base rate, meaning it is the lowest rate on the rate sheet that you can buy down to, or that all adjustments kind of start from. So every rate that you get has adjustments built to it, whether it's because your FICO is a certain way, or whether it's, the property type is 4 units versus a single family, whether it's a purchase or a refinance. Like all these things affect what the rate's going to be. And the base rate, the floor rate, is basically what they start at, and then they add all these adjustments to become where the rate ends up being without buying it down. But the great thing about a floor rate is it also gives you kind of the measure of how far you can buy something down if you really wanted to get it down to that floor rate.
So let me put it out there as a consumer, as somebody who has probably done hundreds of loans over the years. You have what I've heard people call is the rate sheet, right? This rate sheet has a lot of factors, but it starts with the floor rate. And again, based on the lender, the DSCR lender or whatnot, there's adjustments up or down, right? This is we want this, we don't want this. Your credit's here, it credit's there, right? So it all adjusts. And then on top of that, so maybe again, let's say the floor rate's 5.5, like this example. Let's say me as a buyer, given what I am buying, how much down payment, credit, DSCR, or payback, whatever it is. Say it's a 6 or even a 6.25. Okay, Michael, we can get you a 6.25 based on what you were buying. But then you are going to come to me and go, you know what, Michael, for a point or a 1.5 or whatever, you could buy back to that floor rate. Do I have that right?
Yeah, absolutely. That's right on the head.
Very, very cool. And the other thing that I think about points is in today's environment, I want people to realize, I still think this is true, but please correct me if I'm wrong. You could get sellers to contribute up to 2 points with DSCR loans, or has that changed?
Yeah, no, absolutely. 2%. And you can do there's two types, right? And people get confused. There's the temporary type and then the permanent type, right? So temporary buy down is if you hear like a 2-to-1 buy down or whatnot, that is temporarily bringing it down 2% lower than the starting rate, and then it goes up 1% the year after, and then goes up 1% the year after for the remaining of the
Right.
30 years. A real buy down that's going to be permanently bringing it down is actually, in your example, going from, let's say, 6.25 to 5.5, having 2% to buy it down from there.
Yeah. Again, folks, in today's buyer's market, investors, please ask for the moon. No reason you, the buyer, should be paying points in this example. You should be getting the seller to kick in points. You're the buyer. You make the deal. So get aggressive. Ask for credits. Ask for the moon and negotiate from there. Okay. So this is very cool. Understand floor rates. Understand points. We're in a buyer's market, so get the seller to kick in. Now tell me about this program. Tell me how small this box is. Do I got to be like 37 years old, standing on my left foot, on an airplane, or how tiny is this box to get me to a 5.5 floor rate?
Right foot on a boat, but it's actually not too small. The biggest caveat for this one is it's a very specific lender. They want only in the personal name. Okay, so
Okay.
this
So no
means that
LLC. No
no
LLC.
LLC, trusts are okay, right? Which I think trusts are starting to become a little more popular as an entity type
Yep.
for these products. But trusts are okay, personal name. Maximum LTV is 80%, so that's great. Yesterday,
That's wow, 80%. That's shocking.
yeah, I actually yesterday submitted a loan. The exact scenario was 20% down purchase, 780 FICO. It's single family residence DSCR, and it was starting rate was like 6.3, and they bought it down to 5,875 with like maybe 0.75% in buy down,
Awesome.
and then
Damn.
five and a
Sub
half.
6. Sub
Yeah, and
6.
5.5 was like 2-ish points to buy
Yeah.
it down there, which again, if you're trying to maximize set it and forget it, like
Get
why
it.
not do that,
Take it.
right?
Yeah, take
So,
it.
and then so FICO restrictions, minimum FICO is at least a 700,
Okay.
and
That's
then
not bad.
minimum loan amount, unfortunately, is going to be at least 200.
All
So
right, so
that's
they
where
want
it kind
bigger
of,
loans. Yeah, they
yep.
want bigger loans. Again, this is you know what's really funny to me. I mean, we're freaking out in the interest rate market at 6.5, 6.6, 6.7 conventional, folks. There are DSCR lenders that if you work with folks like Convoy, you're in the fives. And let me just tell you right now, when conventional gets to the fives, things about to get bananas. So if you can get a DSCR lender to get you something in the fives ahead of the game, hello, wake up, time to do the work. What do you think?
Yeah, absolutely. And I think the biggest part and the biggest benefit, especially for a lot of people that want to get into this type of program, is yes, there's like kind of obviously the guidelines that you have to fit in, right? Especially the biggest one being personal name or trust, right? That's the one that kind of hurts people because a lot of people want to go DSCR because they don't want it in their personal name, they
Right.
want it in their LLC. But if you want actually the best price program and you want to fit inside the box, right? And you want to keep it and hold it long term and maybe in the future be able to refinance when rates, if rates come down, right? To where we, five
Dude,
and a
you're
half.
dude, you're a five and
Like,
a half. I mean, you
yeah,
may never refi that, right? Because it's only going to
exactly.
make sense at like 4.5. I mean, we may
Exactly.
not get there. Yeah.
And if investment rates are 4.5, this is the biggest reminder I always tell people. If you think that investment rates are going to be 4% four handle, that means primary rates are 2 and 3. So
Exactly. This is not coming. Yes,
yeah, so
exactly.
just keep that in mind, right? Even if investment rates are 5.5 average without buying down, let's say, that means primary rates are 3 and 4 without buying down. So
Exactly right. Exactly.
like a lot of people just kind of I think forget that fact because they only focus on the investment product. But if you buy on this product, right, 30-year fix. Oh, I forgot to tell, is no prepay,
Oh,
right?
shut up. No
No
prepay.
prepay. No prepay. So
Wow.
there's obviously it's trade-offs, right? But this will allow you to unlock, I think, a lot of properties that
Oh, no
cash
question.
flow well and you can keep for a long time. You want to maximize your cash on cash, this is the way to do it.
No, I mean, let's just put some numbers around this. National Association of Realtors. Now, this is talking owner occupant, but the numbers are still the numbers. National Association of Realtor estimates that if mortgage rates get to just 6, and again, here we're talking 5.5, we will unlock 5.2 million buyers. 5.2. And we have 900,000 homes available. So, what Jonathan and Convoy Home Loans are bringing you is the opportunity to get 5.5
Yeah.
on an investment loan where
Yeah.
there's no competition. Everybody's scared. If this doesn't shake you to your core and make you reach out to Convoy Home Loans, I do not know what you're doing.
Yeah.
You're crazy.
Not only that, but also if you are more short-sighted and Mike hates arms, right?
I
But
do.
we kind
I
of
do.
talked about it at the beginning. Mike hates arms, but if you want an arm, right, there is, if you go a 5 year or 7 year or a 10 year or a 3 year, or any of those arms, the floor drops to 5.25, right? So if you want to buy something and be fixed for 5 years, let's say at 5.25, then you can be there, right? Buy it
Yeah, you
down
can.
there. And actually, this arm is a little special because they only do, it's off the SOFR, right? And there was a period back in 4 years ago, 5 years ago when the SOFR was like near zero, right?
Hmm.
Where the rate was just the margin, which is 3% from the SOFR for this product on an adjustable. the rate was just 3
Mm,
because the SOFR was near 0.
right.
So if people are, and there's people that want to take risk and there's people that want to do that, right? If you want to do that, this product will allow you to basically float down
Mm,
to 3% from your 5.25 if you wanted to. The only
wow.
caveat with an arm is it has to qualify off 2% above the starting rate.
That makes sense.
So, I mean, that's the conservative aspect. But I
Folks,
mean, if you're,
folks, folks, stop it. You got a
yeah,
5.5, 30-year fixed rate mortgage. Stop talking about 5.25. Just stop, 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 stop. We're not doing that. Oh, it's
people want
crazy.
it. People want it.
Yeah, yeah.
Um,
Not my people, but some
yeah.
people do.
But if you're trying to do like if you honestly if you were thinking about it as like a bridge type scenario where
Sure. Oh yeah.
if you know in 1 year or 2 years you're gonna exit, right?
Yeah,
And that
of
that
course.
is the plan, right? Let's say you own something and you want to do a cash out on it. This is where I see the best scenario for the ARM case, right?
Okay.
Cash out loan, you cash out 70% or 75%. You are know you're gonna exit from the property in the next year or two, right? Or
Hmm.
maybe even less because there's no
Sure.
prepay.
Yep. Yep.
You take the arm for 3 years or 5 years, take the lowest rate right now at
Sure.
like whatever it is, get it at 5.25, 5.5, whatever it is at that point. You do that, take the cash, utilize it, right? And make
Sure.
a return greater than 5.5 or 6% at that time.
No, you're
And
you're
then
absolutely right.
exit. Yeah.
It makes perfect sense for a business model. Right. If you're a business model of you're flipping, houses and you got caught for a little while in this slow market and you want to get some of that cash back so you can buy the next amazing deal, makes perfect sense. That's not a buy and hold investor though. That's not
Yeah.
a buy. That's not a one rental at a time guy, in my opinion. It's okay. But yeah, it does
Yeah.
make sense. I know a lot of folks in Southern California or Orange County that are flipping $1 million homes and got caught by this slow market. So totally makes sense that there's a good avatar for the 3, 5, 7 years. It makes perfect sense to me. Um, the other thing, I don't know that if you heard this morning on the daily financial news, I've actually said this a couple of times and I want to see what your reaction is. I actually think today, right now, is the best real estate market I have seen in a decade. Let me explain. For most people, it's a nightmare. Home sellers, nightmare. Flippers, nightmare. Real estate agent, nightmare. Mortgage brokers, nightmare. However, I am none of those. I am simply a real estate investor who likes finding amazing deals from motivated sellers. And guess what is easier today than any time in the last decade? I'm actually having people reach out to me because of this YouTube channel saying, buy my house, right? It is a very, very good time to be an investor who has cash and access to capital. So I just think people need to change their mindset. It's a real estate, it's a nightmare for lots of people. But for people that watch my channel, people that want to build wealth, who are everyday wealth builders, it is the best real estate market I've seen in a decade. What do you think?
I agree. I mean, just think, everyone again, people always have a short-term memory, but just think 5 years ago, right? People were bidding left and right. People were buying houses without even looking at it,
I
right?
know. Crazy.
So like that versus now, and by the way, the actual prices haven't like they've dropped a little bit, but they haven't like crashed down from where they were, except in certain markets and except certain types of properties, right?
Yep. Mhm.
Airbnbs being a big crashing part.
Yep.
But besides those, right? When else have we had an opportunity to make offers and actually be countered with
Yeah.
realistic numbers, right? People are actually willing to counter. I've been going to a lot of open houses lately, just kind of looking and seeing what's out there and talking to different people. And every agent that I talk to is like, just submit the offer, right?
Mhm.
Never in any other market, no one would have ever said just submit the offer, even for on market properties, right?
Yeah.
They would never say, they'd be like, "Oh, that's too low. That number's too low. Don't even submit it." But right now they're saying, "Just submit the offer. Let me just present it and see what they say." Which means that there's not enough people actually doing the aggressive kind of approach of doing the work of, "Hey, let me offer a little less and kind of work up or go back and forth." That has not happened ever. So I think this is
Yeah.
an amazing opportunity for investors that are doing the work.
Yeah. At the end of the day, I know with certainty, and I'm getting notes almost every day of people getting deals for 20, 30% below list price. It has never been easier to find motivated sellers in the last decade. And, I've been doing this 25 years. This is the second real buyer's market I've seen in 25 years. And most people are going to miss it. Most
Yeah.
people are going to believe the headlines. It's a nightmare and this, that, the other thing. And there'll be, there'll be folks like my community and all the wealth builders that are in it. And we're going to get some deals of the decade. And maybe a few of us will even get deals of a lifetime, and we'll be smiling while everybody else is sitting on the sidelines. So I'm excited. And now you're giving me a product where even I could get 5.5 fixed, 30-year money, dude. I'm smiling even more.
Yeah,
It's
and
crazy.
um, I did want to bring up something that I thought was interesting in regards to, because we said 20-30% off the list price. So what I'm encouraging a lot of people to do when they're doing the work is don't just look at the list price of where it is right now, right today, right? Because everyone has a list price based on what they want to try to sell it at, or above
Mhm.
or below. Really look at the history of the listing, right? Not just what the listing is right now, but what it was. And then see kind of if you can paint a picture of the story of where where they either increased it to flip it, or where they actually, what kind of happened in that story. And I think it would help you create a better offer. And then if they rebuttal you and counter you, it'll give you more ammo to kind of fight against whatever they're reporting back at you. So it's just an extra little tidbit.
There, folks. At the end of the day, working with Convoy Home Loans is a lot of fun. You want to work with this young man, Jonathan, or his partner, Dustin. If somebody wanted to start the process or dig into this 5.5 30-year fixed, how do they do that?
Go to convoyhomeloans.com and let us know you came from ORaaT.
Again, let them know it came from ORaaT. That way you get service from Dustin or Jonathan. If you don't, you're going to be in a queue. And just like Disneyland, nobody wants to be in the queue. So tell them you came from ORaaT. Thanks, guys.
Thank you.